Hey investors, I'm going to make this fast. I'm on my lunch break. So today we're going to talk about how to obtain a hard money loan for a flip or a burr. So I'm only going to share what my experiences was, and this may not be everybody else's experience. So the simplest way for me with a hard money loan was first to call some of the lenders. You can search hard money loans straight into the Google search bar. I would suggest maybe your first time working with a local lender, getting some references from some other investors in the area. That's definitely what I did. That helped out a lot. So we'll start off first. What would we need a hard money loan for? It's not for every part of an investment. For me, for a flip, you're going to need a hard money. So what a hard money is basically a transactional loan to where you can get funded for the property and the repairs. A breakdown of what I'm getting right now is about 90% of the purchase of the property. So that means that they're funding 90%. I'm going to pay a 10% down payment. They're funding 100% of the rehab. That's about as good as I'm getting right now. Some people say you get 100. You definitely can do your research. If you find it, you find it. If you don't, you don't. So what the drawback to a hard money is that it's pretty high interest. So you're getting somewhere between 9 to probably 12 to 13%. In my experience, I'm getting charged at about 12 right now. And you also get charged percentage points called points. I think I'm getting like two points for the loan. So if it's $100,000 loan, then I'm getting charged an extra $2,000 on top of that at the end. Most of these loans are going to last between, I guess as long as you need them for a short term, but long term, usually about 12 months. You usually don't want to be in them after 12 months anyways, because they are very expensive loans. Now, you use these for flips or burrs. You're not going to get traditional lending on a flip or a burr. I promise you that. I have a couple different lenders on hand that I use, and if you need some references, just leave that in the comments. I'll try to connect you with somebody. So the way these are used, some of the other fees, they situation called draws, and that's when you need money to pay your contractors. You usually do about 3 to 5 draws per project. The less, the better for you, because most, if not all, hard money lenders will charge you a draw fee, which is, I think, $175 each time you ask for them to give you the money. So that can add up. That's just one of the many things that would add up. It's a very good loan for somebody with, I guess, not a lot of experience or not a lot of money or even credit. I know that, sorry, I'm getting used to this new camera thing. I will say in my experience, the biggest thing is that the deal made sense, because this is their property. If it falls through on you, they did verify funds. That's pretty easy to do for you. So they say, well, we need to see 20,000 in the bank. We can make them see 20,000 in the bank if you don't have it. They didn't verify my W-2. They may not. It really goes off the company, the deal, your references, and several different things. And like I said, the big drawback is that it is very expensive. And the positive to it, it's relatively easy to get. It will seem a little intimidating, but it's actually, now that I've did it a few times, it's actually one of the easier processes. I can call them today and say, hey, I got a deal, and bam, they'll say, okay, well, when do you need to close? And then we'll go through all the process on that. You need to get insurance and all that regular stuff that you would have with a regular home anyways. So hard money, don't be scared of it, but don't rely on it. There's better loans out there. You can get private loans from, people that you may know. And once you get in this business, you'll start to find out that people do have money and they do want to lend it. You'll get your bigger pockets and stuff saying from your grandma or from your uncle. I don't have a grandma or uncle that has money like that. If I did, I don't even know if I want to borrow from family. I don't know if I want to mix A. But if you do, you feel comfortable with it, you got your own money, do what you want with it. But that's my basic breakdown of hard money. I'm sorry, like I said, I'm on my break, so I can't go too deep into it. If you have questions, if I missed something, which I'm sure I probably did, I can explain it to you in the comments, or I can make another video. But that's your simple breakdown of hard money. Like I said, go online, find a hard money lender, call them, talk to them, see what the requirements are, find a property, have proof of funds. You may get your credit ran. I think I failed to mention that. You may get your W-2 verified. You may need a partner. It's really not that hard. Don't be, like I said, don't be intimidated by it. But that's really it for hard money. I just really wanted to get that out there because I think that's a barrier for a lot of people that want to get their first flip. Is how I'm going to fund it. I don't have no money. We're not going to use that excuse in 2025. We just ain't going to do it. If you want to be in real estate, you want to be in it. If you don't, you don't. You'll find any excuse anyways. But anyways, thank you for checking out the video. If I brought you any value, just go ahead and like it and share it. If you have any additional comments, put it in the just put it in the comments and I'll answer it the best I can. And I appreciate you guys watching the video. Check out my next video to find out about BRRRR financing.